Okay, Sunday morning, and time to analyze the Canadian dollar. Looks like there's a lot of volatility here coming up next week, and I'm going to place my preliminary scalp strategy entry orders here. I'm going to look at the trying to find my first order placements will be about 200 pips from current price. I don't think I could fill, but I'm just going to place them there just so I can mentally prepare for the possibility of a entry. So I'm running everything vertically here, just looking for pips. I think I definitely want to get in here at this previous baby top. So that's a doji of some order of magnitude, or it's either a hammer or a doji, which are really big deals in prices because there's a whole controversy apparently there. So I'm going to tag that, and on the top side, just in case we blow at this top, I'm going to put a sell up here just because it's a nice distance out. So this is my preliminaries. Pending's not going to risk too much there. That's probably going to be a scalp actually. So I would definitely get out of that. That one I'll be getting out here. So I'd only be risking. Maybe stop here. It would just be like this. Where you see this kind of stuff. This where it comes up and rejects, comes back. But I put a series in there. As the time goes on, I'd build up a series in there, very small orders. Now, if you would just come and fill this in slowly, by the time Tuesday comes, you might actually be getting filled on some of these things, depending on how close you put them in. This looks like a no-brainer here to just start considering this an order placement, not just a place to draw a line, but just put an order in there so you can visualize when it would come down in there, how it's going to bounce like this. You could just pick up these easy 150, like a 50 pipper, and just place a cluster down there. So you'd be creating this trade plan on the fly here. This is just your just the real easy, definitely want to sell up there. That's going to be a crazy price. You definitely want to buy down there when they come and grab all these guys stops and maybe they rip it up. Definitely want to sell up here. Okay. I think in terms of the outrageous prices for this one, it's going to be down here. And this one. So imagine you've got 1 million orders up here. And they're just small. Well, this is your cells. Now you can start to envision. Now we come back with the equidistant. We'll save you the effort of drawing more trend lines, and you can stay inside of the fractal of this market. Like you could pick this fractal here, this perfect breath. Come down here and start to build your scenario. So you're going to have to build a scenario, and then here's the bearish scenario. Take that fractal, come over here, make sure your fractal is valid by finding a top bottom rollover. So that's the crossover point, so that's valid. So you bring that there, and you're going to build this little story of where you want to get in. So you definitely want to get in at this top, and you have an order cluster down there. And then you don't want to, if you get stopped out of these guys here, you don't re-enter till the next harmonic, which should be down here, so to speak. Now realize this is a daily chart. I mean, I'm only doing the dailies because structurally these are pretty easy. And as far as blowing up your account and over trading, you're not going to get filled on some of these orders. And if you do get filled, these are going to be great places for it to move about 100 pips, at least 50 pips off of these bars. So, you can take the same strategy to a 4-hour chart. I'm just saying that for the people that don't want to be in the market, but when they get in the market, they want to definitely be guaranteed of a high probability exit. So, yeah, it's just this is how strategy goes. And then if you want to breakout trade this thing, you're probably just going to get it at the market, or you're going to have to put a sell order here. Like if you wanted to sell this thing, this is a high probability this Canadian dollar is going to spill out of this. This looks too good to be true. I think I don't think we're going to be able to. We're going to find out this week, that's for sure. So if this does go up, dollar CAD, want to sell up in here. No, gotta go 4 hour. And you're just going to place orders like this on the 4 hour if you want to sell this. These are all the pivots. This one matches the one I did from the daily. But big seller up there. There's your top bottom. You're already short right now. If you sold this on Friday, you're already short. Your target's down here, but I have a buy limit here, a buy limit there, and exits for these guys are going to be this one's going to exit here, this price, so you're going to make this much money. You have to stop down. Actually, I have pretty generous stops on this stuff, and then it's high probability trade. Then if they tag this price, I'm going to get out at this last known low for that. And then if it's, then I have a buy order down here. So I have a buy limit here. And this is going to exit on the, going to exit right there. So I'll probably have a stop like this. Will actually be a very tight stop. So this would be a big winner, low risk. And then on the bullish side, I'm going to put a buy limit here with a stop here, buy limit here, stop here. You have to put a series of orders in. You can't just put one order in, because what if this happens? And then look at, you missed out because you had too tight a stop in there. That's not good. So, is this thing, in other words, you can open into Sunday night, come down here and touch this, consolidate, and then you can come in with maybe a buy stop, buy one at the market, put a stop here, wait till it gets stopped out, then have a buy limit here, take profit there. But you have to play all this out ahead of time, and then you have to have, if you want to trade both sides of this, you have a backup plan. Or you could just go to the next chart and start to come over here and try to find ways to lose money. But this daily chart, I can't live on the daily world. So here we drew those on the dailies. Here's our 4 hour structure. Same pattern here. You'd been a seller on this, and your first target's going to be here, last known pivot, which is right there. So that's your top bottom. 4 hour chart's just easier to make money. There's only 6 choices a day to lose money on the 4 hour chart. Like this whole drama here, just beautiful accumulation phase. So we're coming into that scalp window. Here was the beautiful no-brainer scalp window. Double top on the 4 hour. Get your buy limits here. Your first exit's here off of this. Bam, easy money. And then let some of the other guys roll up into this. So you don't know about this yet, but you do know about this. Right? You know everything up to this point here. This is what you do know. So you placed your buy limit here, right? You don't know about this yet, but you do know about this, and you know about this. That's all you know about the market. Is this gap, this undercut. And You also know that about this double bottom, right? And you know about this. So if we ever came into here, you'd make this much with even a tighter stop. And when the market comes to you, like it did in this case, this bottom. See this top, bottom, top, bottom, top, bottom. You knew that, and you knew this. You knew that. You put a buy limit here. You don't know about this yet, but look what happened. See, you know this. Now, put a sell limit there, and you know about this. Right? You know about this price. You exit here. You have a stop here. But you don't have just one order here. You have a scalp. You have at least 3. So if you're trading 3K, you're going to risk about $6 to make whatever, $10 or $12, double your money or triple your money. But the market doesn't have these people that have these fantasy trades at 10 and 1. Yeah, sure. You buy here at the market. In other words, you put a buy limit here with a stop. That's still a 40 pip stop. Don't forget there's a spread on this currency of 9 pips. This is a broker. This is a retail broker, but let's just consider that to be the slippage number. I mean, you got to have a stop down here. You can't have no 20 pip stops on this thing. You need a 50 pip stop on this. You're going to make 100 pips, It's double your money. It's high probability trading. Every time you see this close on the 4 hour, you literally you could pull the trigger on the 4 hour, or you could just have a pending sitting there that just keeps getting refilled. There's 80 fucking pips, man. Then look at this explosion to this key, right? So, and then you could probably, what you probably should do if you're a person that likes, you could print out the chart like this and just start drawing it out, mark it up with a pen in the real world, then scan it back into your computer. And I think I'm going to do that myself. I'm going to get a scanner, and this way you can feel the market. This is 100 pip handles. This is this is not the euro against the dollar. This is a big time high volatility. People are always trading this stuff because it's very dramatic looking. Moves a lot of pips, but the spread's brutal. And so what I typically do is take these 2 fractals. This is the bear argument, and here's the bull argument, and just keep copying these, okay? And then extrapolate the channel in the future, so that you can. What you want to really do is coincide these support and resistance windows with the breadth of the market, the cadence. So you can anticipate the next turn here. So we're there now. So yeah, come back maybe here, put a buy limit here to get picked up on the north train. So right about here, we've got to hold the supply line. If you can see, there's a so here's the pullbacks into the top. So you have a buy limit here. You got picked up. Forget these wicks. Forget this wick thing. That's not the market. That's just the market maker. Market is only price over time. So the triangle. You just not get. I don't know what happened to people. They just don't draw. They don't know how to draw it. They're drawing it here. This is not support. This is support. This is the spread. So you're looking at. That's if you have people that are stops in too tight. Anyways, I hope that helps. mean, everybody's got their own entry technique. I'm just trading at the edge of the market. Like here, this is ridiculous spread. Go to 4 hour. Same thing here. Obviously, you want to have your buy limit here. See, set it, forget it, walk away. You know, look how beautiful this thing tags off the 100. Of course, this is because the spread's 10 pips. This is the bid price in black. This is not where you get in. So that's why this is, you know, you have to have your buy limit here actually, just to get filled. You know, but here I guess it dipped below, it filled you here. But you almost have to be here really, just above the round, because since the spread's so nasty, I don't have the 10 pip grid out, but if I did, I guess this, when this bid goes 20 pips below the round, that means you're getting filled on your terrible spread, because actually the market has to come down to so it's very deceiving when people look at these extreme markets. They don't realize that, see that wick, that, I mean, that's a 100 pip wick on that 4 hour chart, but that's my entry. You know, there's a pivot right here, there's this double top, right? But then you kind of maybe you didn't get filled, see, because if you were here, this is not a fill on this wick. That's no fill. These guys got filled. Bam, bam. So the next sell order is going to have to be here. First entry here. Second. You go like this, right? Of course, now if I switch that from a 4 hour to a daily, you're gonna be like, oh, that's crazy. That doesn't look too bad there, I guess. Because it makes sense, right? There's double tops internally here. But yeah, you build the whole trade plan, and then you don't have to be in the market. You can be, you know, on the sides there and wait to get filled on these things.